Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, October the 25th, 2012. Looking at the Dow Jones Industrial Average, this is a 2-year chart. Each one of these candlesticks represents a single week of trading activity. That means that this current candlestick formation here hasn't actually finished forming. We still have another day, Friday, before we actually know what this candlestick looks like. The main things we've been looking at and talking about for a while now, the past couple of weeks, and why we've turned bearish, is that we have broken this major support line here, and we also have closed below that. That's what you define broken, and then you get a shooting star signal here telling you it's a sell signal and you should start selling that. And we've been selling it for the past week. Since Thursday we've been bearish. A couple things to note about this particular situation here. Note this high point here, higher high here, trending to the upside. Same time period on the ultimate oscillator here, high point, lower high here, trending down. Bearish divergence telling you this rally is not sustainable at this point. You rolled over here. As long as this candlestick stays in this type of formation here, this is simply calling for more selling. It's telling you it's a continuation signal saying look for more selling. You don't look for that to change until you get some kind of reversal signal. And typically you're looking for a hammer candlestick, something like that would be nice. You get a nice little sell-off, hammer candlestick formation. That tells you to look for a bottom reversal situation. Same thing here, and that's why we look for those. Whenever you see a pullback that starts like this, and you may have a shooting star signal, then a weak to the downside, indicating continuation signal to the downside. The thing to note about your sell-off here is that it will grow in its size. You'll notice that the volatility increases, and you'll see the next candlestick formation gets larger, and that's quite common. You see this move here to the downside, larger, and then it starts to stall, and we start to move sideways. So we find a bottom, and we bounce off that, and we come back, test it, prove it, and start moving to the upside again. The thing that I want to point out here, and if you watched yesterday's market analysis video, you've already seen me talk about this. Whenever you have a hammer candlestick at a low, that's great. You get a nice reversal signal, you trade to the upside. She pulls back, another hammer candlestick formation, you trade to the upside. As long as that's the case, you're fine. Whenever you get a pullback and no hammer candlestick forms, then you have a problem. Something's changed. You're seeing a weaker move to the upside. And that's what happens again and again. When you see this move up here, you expect, looking at this, there's no hammer candlestick formation. In fact, you've got a shooting star here. It's telling you that the odds of you coming down and testing that again are high. So I start looking at giving targets and say, okay, well, I expect this sell-off is going to pull to at least this level. I want to test that. So now that we're looking at this situation here and we've had this pullback here, you'll notice there's something missing. There's no hammer candlestick formation. So now that we're rolling over here, we got sell signals, and you ask me, why have you been talking for the past couple of days about a bigger move to the downside? This is why. I think, in fact, we're going to be testing the 12,000 level, and that means the Dow Jones Industrial Average could easily shed 1,000 points. Will it happen in a day? Probably not, though I wouldn't put it past the markets with the flash crash and fat fingers and so forth and so on. But the main point here is to draw your attention to the fact that I do not see any reason to be long this market. If you're not short, you should be in cash, and I think the downside potential is much larger than people are currently pricing into the market. It should also be noted, as I've stated before, whenever I'm looking at any market, I want to go and compare it to other markets and make sure that I'm getting confirmation. You can check the low point here on this chart, or the NASDAQ, the S&P, the Russell, the Wilshire 4500, and they all indicate the exact same thing. I think we could easily see massive selling here, especially with the upcoming fiscal cliff and so forth and so on. Okay? If you've not been to the free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.